Last week was a little slow on the news front, but man, this week, Matt, is chock full of opportunities for the market to move. As you think about what's coming out this week, what's most important to you?
Sure, Steve. And I'd tell you the most important factor this week is going to be earnings from the big tech companies. They're coming out this week, and I'm looking at three things in this market right now. One is earnings have been better than expected. We've had about a third of the S&P 500 report, and results are growth of about 8%, which is pretty good. The starting point 2 weeks ago was for growth of about 6%. So most of the companies are beating their earnings. Focused on that, I'm focused on what impact the tariff revenues have had, or excuse me, the tariffs have had on revenues for these big companies. And then third, what's the CapEx for hyperscalers look like? Last week, Google reported and they took their CapEx from $75 billion to $85 billion in CapEx this year. That's a phenomenal number. So we're going to get numbers from Amazon, Microsoft, and Meta this week. I'm interested to see what those are going to show. Now, it's also a big policy week, Steve, with the Fed meeting on Wednesday. What's your thoughts around the Fed and other events there?
Yeah, thank you, Matt. It is. The FOMC does meet Tuesday and Wednesday of this week. It's right in the middle of this, period where there's a lot going on. From an economic standpoint, we're going to get the Fed's preferred measure of inflation, the PCE, on Tuesday. Inflation overall, if we think CPI, PPI, and the PCE, it's not like inflation's moving higher, but the progress towards their 2% goal has slowed a little bit. But I think the biggest thing from an economic standpoint this week, Matt, will be the employment report, which comes out on Friday. If we're going to think about how some of these policies are impacting the economy, look, you mentioned the additional CapEx. Really positive thing coming out of the One Big Beautiful Act was this treatment of corporate expensing. But on the consumer side, job growth remains really important. We're at 4.1%. So overall good, but we're seeing some cracks on the edge. It does appear that while companies aren't firing, they're not hiring a lot of new people as well. The labor market, to me, is going to be the most important factor for the Fed as they think about interest rate policy moving forward. And so what we'll be watching from the Fed as they come out of this meeting, how Powell answers those questions about September as a potential rate cut, or are we talking November or December? That's going to be the key for what we think from a policy standpoint going forward. So, Matt, thank you. We've got individual company results. We've got a lot of economic data coming out. I would just say this, Matt, to end. We remain way more optimistic than pessimistic. And while there's headwinds in the short run, some of this stuff you're talking about, as we think about 26 and 27, we could be setting ourselves up for a lot more growth. Agree?
I agree, Steve.
Thank you all for joining us this morning. We'll look forward to talking to you again soon.